I will tell you why I think you might have missed the best real estate market in Canada at the end of this video, because we're gonna go through the data together and let's see if you come to the same conclusion that I did. Okay, so today I want to introduce you to the Halifax, Nova Scotia real estate market. And for the contents, we're going to start with a quick introduction. We're going to talk about populations, understand the market, understand the people, the industry, and the economy of Halifax. And then we're going to go over data for homeowners and residential investors, basically single family units, townhomes, and condos, numbers, right? And then we're going to go over some data for multifamily as well, for investors who invest in duplex, triplexes, or more units. And then we will go over the economic plan of Halifax, Nova Scotia for the next 5 years, because we would need to know if the plan of the city would matches with your plan, your budget, and what you're hoping to achieve from your real estate investment. At the end, I will give you my thoughts and prediction of why I think you might have missed the best real estate market in Canada. Okay, so let's start. For the introductions, the population of Halifax, Nova Scotia is 439,819 people. That's a 9.1% increase since 2016, which is actually a very, very big increase, right? And they have a lot of population as well. And their median income is quite high, $104,000 in median per family or per household income, right? And then the median age is 40 years old. Now, about 40% of the populations are renters. So as you see, there's a great market for rental as well. And then there are 58% of the market are homeowners. So we also know that homeowners actually move in. So you will see the single family market is actually quite strong here, because you don't have just investors, you also have homeowners. Unemployment rate surprisingly high at 11%. I thought a city like this would do better, but at the moment we're at 11% unemployment. And for major occupations, you mainly see people working in sales, service. That's 26%. And then we have business, admin, and finance at 18% of the occupations. Education, law, and government services at 15%. And then trade and transport at 15% as well. And here are three major industries, right? The number one major industry is healthcare and social assistance, which is 14%. And then you have retail at 11%. And then you have public admin at 10%. This one I have to Google, because I didn't know what it means, but public admin means government working for the government, right? So this is where it gets crazy. Let's go over the residential real estate market in the month of October. Right. So there was 624 active listing, 271 number of transactions happened in Halifax in October of 2022, which is, guess what, 46% less than last year in 2021. But the average price actually went up by 18%. Keep in mind, this is where interest rate is already very high. This is the month of October, so the interest rate hike has already taken effect, and the market still went up by 18% compared to last year in October, right? And the average days on market is 28 days, which is actually still very, very short compared to a normal balanced market. So we still think this is we're still in a seller market here. Okay. Now that was single family home. Now for condo, transactions went down by 35%. Sales price only went up by 3%, which is expected, because condo price or condos in general is a lower demand product compared to a detached home in most market. So that's why you understand why it doesn't go up as high. And it still only takes 25 days for it to be sold. So again, admit in this crazy high interest rate, well, not crazy high, but higher interest rate market, Halifax still managed to sell their properties within 30 days or less, and there's still market appreciation, which is crazy. And their market appreciation is much higher than Calgary, right? The next best market when it comes to market appreciation and how strong the sales has been. And then if we go to the next page, go back to last year and compare 2021 to 2020, the number of transactions still went down in 2021 compared to 2020, and the price went up to 23% compared to the year prior to 2021, and average day on the market was only 20. So this year it only takes 8 days longer to sell, and the price of this year is still 18% more than last year at the same time, right? So it's just amazing to see what this market is doing. And let's go on to the next part. So this is for the multifamily investors, right? So in Halifax, what's happening is we have a vacancy and cap rate. So vacancy at 1%, which is very, very extremely low. And cap rate is between 4.25 to 5%. It depends on the location, condition of the properties, and type of properties, right? So average rent is also between $900 a month to $1,500 a month, and 3 bedroom is $1,569, 2 bedroom is $1,335. The next one we have here is purchase price. So now in Halifax you have a prime locations which seem like to be their downtown core, with a very, very high purchase price. But in the rest of the city you have a much more reasonable purchase price between $160,000 to $190,000 price per door for your apartment building or for your duplex, triplex, and fourplexes, right? So I put the notes here. It's for dependent on locations, conditions, and vacancy of the property. And average day on market that we're seeing is between 40 to 80 days. How long the property is being on the market before being sold. Again, this is for multi-family property, right? Not single units. And for the prime locations properties, you're seeing a significant higher price per door between $400,000 to $500,000, and it depends on the location, and it is mainly in the downtown core, the main part of Halifax, right? And however, because the price is significantly higher there, that's why you're seeing day on market takes a lot longer to sell something like that, which is a very common challenge for this type of property. Let's go over the number for multifamily investors. As you have seen, this might not be the best market for cash flow in the prime locations, right? Because land value has gone up so high that you most likely not going to cash flow until you redevelop the property or the land, right? If it's a 2 units and you can make it into a 10, 12 units building, now you can cash flow in that market, right? So the key strategy I would think here is that you would buy in nearby area to Halifax, where you can get price down to 160K, maybe lower, and now you can rent it. Now it matched the 1% rule, and now you will probably be able to cash flow or cash flow comfortably. This is a 5 year economic plan from the city of Halifax. Okay. And so, number one, they want to grow their GDP to $25 billion. What that means is the city has to be able to produce that much by 2027. And in order to do that, they have decided to take some of these actions here to attract national and international investments and trade people. Right? They also want to accelerate innovation and entrepreneurship. That's very, very good. There will be more new businesses, more innovations. It's good for everybody. And more housing supplies. That's their plan, right? Because more people coming in, that means they will need more housing, more places for people to live in. And they also want to increase the population to 525,000 by the year of 2027, and they're hoping to have 310,000 of those people in the workforce. Right. So how do they plan to do that? They plan to attract international and national talents, and they want to also bring in new immigrants and provide them with the best services to help them settle in the city so that they can start going into the workforce and start contributing to the city, right? And eventually they also want to make Halifax a nice, better place for people to live in. And part of that plan is they want to make it easy for people to move around and easy for people to move goods around, right? So transportation is the big part of it, making it easy for people to be able to do business, going back and forth, travel, and have an easier lifestyle. I want to give you my predictions and interpretation of why I think this was a very, very strong market. If you look at number from 2020 to 2021, the market in October alone, the market appreciated by 23%. And then it appreciated another 18%. So that's in total 2 years. In the month of October, the market went up by 41% in 2 years, right? And that's we assuming we buying at our market price. So imagine if you found an off-market deal that is another 20% under market value, you would have made 60% under in 2 years period. And we are entering the worst, or not as good market condition that it was last year and 2 years ago. So you might have missed the best time to enter the best market, which was about a year and a half to 2 years ago in Nova Scotia, Halifax, or Halifax, Nova Scotia. However, if I was a buy and hold, or if I was a pre-sales investor, or if I was a land developer, this is still a good market and still a good time. With the way that the economic plan planned out by the government of Halifax and Nova Scotia, it looks like in the next 5 years they're going to get very aggressive with their growth plan, and population will go up significantly. They will continue to get immigrations and people within Canada to come here and work and live, and they make life better for business owners, and they will provide more supplies of housing. I think in the next 3 years, 3 to 5 years, Halifax is going to be a great market to be in, especially if you can buy at discount rate now. I suspect another 10% market appreciation at the least for the next 3 years. Anyways, hope that helps. Peace.